Thank you for joining me. I'm Alex, and I would like to have a look at Xerox because they announced that they might be looking into the purchase of HP, which is kind of insane if you think about it, because HP is a company 3 times Xerox size, so kind of doesn't really make sense. But what they do is the same as HP, I guess. Pretty much. So Xerox is more in the business-to-business market, where HP is mostly in the business to small business consumer market. So Xerox tends to make products for more professional use. So price currently $37 and market cap of $8.3 billion, whereas HP is about $28 billion. Dividend yield is 2.95% with a payout ratio of 35%, which is pretty nice. Revenue $9.8 billion, slightly down. Earnings $360 million, up from $195 million, so that's going the right direction. And the PE of 13 is pretty nice. HP has a PE of about 7, dividend yield of 3.7% or something like that, and earnings $5.2 billion or something like that. Check out yesterday's video for more in-depth analysis of that. So total assets $14.9 billion, total liabilities $9.6 billion, which gives them a total stockholders equity of $5.2 billion, which is certainly not terrible. Slightly down. It's been trending down for a couple of years before that as well, but overall it all looks pretty nice. So unless you're a growth investor, in which case don't buy Xerox, and the addition of HP also is not that great because even HP is not growing at a huge rate. And seeing how much revenue they have, they can't really grow all that much unless they somehow manage to get into growing markets like China, India, but that is difficult because China is kind of trying to create their own products to have their own businesses become big. And China's economy is kind of weird in the sense that there's a lot of companies backed by the government, which obviously gives them a huge advantage. So I wouldn't expect huge growth out of either of these two companies, but from the fundamental standpoint, the PE is amazing for both. The balance sheet of Xerox is pretty nice. HP not so much, but not terrible. And the earnings not bad at all. And both pay a decent dividend, and both have a very low payout ratio. So all in all, I would say that both of these companies are a pretty nice buy at this point. And again, unless you're a growth investor, in which case you're probably finding better opportunities elsewhere. For a dividend investor, both HP and Xerox are pretty good buys. And for a value investor, I think both HP and Xerox are also pretty nice buys. I would lean more towards Xerox at this point because the balance sheet just looks much better. And the dividend is slightly nicer for HP. The PE is a lot lower for HP, but the balance sheet doesn't look as well. So I would probably lean more towards Xerox for a value investor and more towards HP for a dividend investor. And if the deal goes through, you're ending up with the same company, which is not terrible because they both look like a decent buy at this point. So that's it for me for today. If you like this video, make sure to subscribe. I'm coming out with more videos every day before market open. I hope you have a successful day.